Hey folks, this is Clayton Collins, your host for the Housing News podcast. And one of the best parts about podcasts is you get a little glimpse into the real life and real personality of the guests of each episode and the host. And what you're getting from me this week is week 3 of pretty terrible seasonal allergies here in Dallas. I joked about it last week, but they continue to drive me crazy. So please excuse me if I'm a little off my game today. But it's hard to be off your game when you have a guest that is as smart, as lively and entertaining as today's guest, Leigh Brown. Leigh is the broker owner of Community One Real Estate in Charlotte, North Carolina, an independent brokerage which she started about 3 years ago. But she's been in the real estate industry for about 23 years, and anyone who is involved in the National Association of Realtors or the North Carolina Association of Realtors or listens to podcasts is probably pretty familiar with Leigh. Leigh is also the host of Crazy Shit in Real Estate, where she has some of the most entertaining guests in real estate come on and share stories and expertise. It is a fun listen, and we really recommend that you check it out. But in today's episode of Housing News, we focus in on some of the expertise that Leigh has built up through her 23 years as a real estate broker and agent, stuff she's learned from the Crazy Shit in Real Estate podcast, and some of her learnings as being involved in the National Association of Realtors and other trade orgs and events across the industry. This is a information-packed episode with Leigh Brown, and she delivers information in a very entertaining and informative way. That is why we're bringing her to the stage this summer at the Gathering of Eagles, our Real Trends event focused on the things that are happening in the real estate brokerage market and how folks are building really impressive businesses by thinking of their businesses like entrepreneurs instead of just an agent or a broker. It's a really cool group and a really incredible conference, and we're excited to have Leigh on stage. But today, I really hope you enjoyed this episode with Leigh Brown. Yeah, it's that I think that competitive tension and impatientness gets into sellers or buyers' heads. So Leigh, you talk a lot about like how you can help buyers and sellers, coaching them up front and understanding agency. But how do you talk to your buyers and sellers about the other professionals they'll work with in the home purchase or sale process? So the mortgage professionals, the title professionals, a big part of the agent responsibility, or at least how it works out in a lot of cases, is quarterbacking the team. Tell me about how your buyers work with other professionals across the transaction.
Well, as you know, one of the biggest challenges we have, especially on the lending side. So my cash buyers, I love them. I still tell them I highly recommend an independent appraisal of the house just so they have some peace of mind from a professional, surveys, home inspections, the whole kit and caboodle. With my financing people, God love them. These buyers like to do as much work as they can before they call the realtor. And they'll say, I'm pre-approved and here's my email. I'm like, oh, that came from Sloan, or it came from Lending Bush. And then I look at that and I think, oh God, no, because those always look good on paper, but my clients just don't know yet how to watch for fees. And even if the interest rate and the fees look okay, there's a big reason I get nervous about online lenders. And that's because in real estate, something is always going to go sideways. And we just don't know if it's day one or the day of closing. And when something goes haywire, I can't get a hold of a bot or a human that's several states away. I have no pull with them. I have no relationship with them. And frankly, they're not going to be neighbors with my buyers. My local lending partners, I can go take my sharp elbow. This is the third use of it. You got 5Ks, open houses, and getting a hold of your lender. I can go shove it in Jordan's side and say, look, dude, I don't know what happened here. You need another VOE, and that's number 5. You got to call your closer, call your processor. This has gotten haywire. He'll fix it because A, he's amazing, and B, he lives here. So he's going to see my buyer out in public, and C, I can find him. I know where he lives. And that sounds like a threat. It's a promise. I bring banana bread and stuff to him because he and his wife have lovely young kids. But when you are in proximity to somebody, you have access to them. And I just don't know that our buyers understand the sheer volume of things that can go wrong. And frankly, I blame the realtors and I blame the lenders for that because we're so busy in our marketing saying things like, I'll make this a smooth process. This is going to be easy. And here's your Staples Easy button. And we act like everything's going to work out. And frankly, a lot of times it eventually works out, but there are some major heartburn moments along the way. And the more localized my professional team is, the more likely I can get them to clear the deck and help my folks out. Because when things happen in real estate, there's seldom something you can solve over a 2-week period. You need to solve it in the next 5 minutes, or it becomes a raging fire and everybody's completely lost their minds. I want my local people. And by the way, the fees and the numbers have never been higher with local people as compared to a website. There's a myth that you pay less online, and there's not. Now, there's ease, and for some people, ease matters, but my guys that are local are also very easy too. And there's I think, a misconception that there's kickbacks involved when I, as the realtor, say, here's a lender I trust, here's a home inspector I trust, here's a surveyor I trust. And of course, my job is to make sure that on my list of trusted pros, I've got multiple names in each category because, there's a butt for every saddle and I don't know who they're going to fit in with. But I want to make sure that there's somebody here that knows my name and would get to know their name. And the secret sauce of all that is if I send you, you and your wife move to Charlotte, you're like, I'm tired of the Metroplex. Let's go over here to the Mixmaster in Charlotte. The team that I have is going to take better care of Clayton because they don't want to tick off Leigh Brown because they know Leigh Brown's going to have more buyers and sellers down the road who will need professionals. So they actually take extra good care of my people as opposed to being treated like a number. And I think that really matters. And is, again, a story we should be telling more frequently, that storms will happen. Issues are going to rise up. And that's why I have this whole list. I got a guy. Don't stress out. I got a guy. Be all right.
We have a Slack channel at HW that publishes all of the new registered users for our HW events, like the Gathering of Eagles coming up in June and HousingWire Annual coming up in October. I was just scrolling through the Gathering of Eagles feed on Slack, and wow, I am blown away with the quality of the attendees. Leaders from Keller Williams, Better Homes and Gardens, EXP, Compass, Hannah Holdings, Remax and Home Services, and incredible ecosystem partners like Zillow, Austin Board of Realtors, New Western Acquisitions, UWM, and Bright MLS, just to name a few. If you aren't familiar with GOE, this is our real estate brokerage event for the most elite brokers, teams, MLS execs, and state and local association of realtors leaders. June 18th through 21st in Austin, Texas, at the amazing Omni Barton Creek Resort. Visit the events tab on realtrends.com or housingwire.com to register. So, Leigh, when you spoke at our HousingWire event in 2019, I'm pretty sure the panel was, the discussion point was how lending partners can better partner with realtors and win that business. And I learned two things in that session. One was don't put Leigh Brown on a panel with 4 other people because the 4 other people won't get much airtime.
My bad.
You had everybody in the crowd on their feet, though, applauding at the end of that session. And number 2 is that Panera Bread or coffee isn't going to win some LO business with Leigh Brown and the agents that work with her. So why don't you go a little bit deeper in there about what it takes to win your business, or talk about some of the other best of breed realtors out there of how LOs can get their attention, because we know on the lending side that a lot of originators took their eye off the ball on the purchase business and the agent relationship over the last several years. But if anyone is surviving today, they are focused on purchase, and that agent relationship matters. So give us a little deeper view into how a new originator or originators who have been doing it for years can get the attention of agent partners.
Well, now, first of all, I should clarify, not everybody in the room was a fan of mine that day. There were a couple really aggravated people because I was basically stepping on their toes for all their bad practices. But I've been in the business 23 years. Somebody bringing a rate sheet in my office means zero to me. Particularly right now, we're recording this at the end of April 2023. So if you're listening to this later on, this is the beginning of second quarter. The rates move literally every 5 minutes. I can keep logging in. I can watch the yield curve move. I'm watching the treasury spreads move. The rates are all over the place. The sheet means nothing to me. What means something to me is, who can you help in my space? And the lenders who come in here and say, well, I do FHA, VA, and conventional. Really? That's amazing. Are you serious? But if you're a VA specialist and you came in and said, "Hey, Leigh Brown, if your agents want to know about assumables, I'd love to do a lunch and learn for them." Well, that's when the Panera makes sense. Attach it to some actionable information because I'm old enough to know how an assumable works. And I'm old enough not to have done one in over 20 years. And so I need to be brought back around. My muscles are flabby. I got bingo wings. You got to help me tighten it back up. And there's also all of these early career realtors, because this is a stat your people should know as they're figuring out how to talk to realtors. 67% of today's realtor members have never been through an economic downturn. And so when that many of them haven't been through a downturn, that means they came into the business after the Great Recession. So they don't know about things like buy downs. I mean, I have cracked up watching Instagram and people send me TikToks. I won't download it because I don't want the communists to have my face, but they are see all these little ads out there where agents are like, "Oh, did you know there's this buy down? This is amazing." And of course, it's brand new and fresh to them because it was brand new and fresh to me years ago. But we've not trained on it in a while. You haven't needed it. Since COVID started, you've had cash buyers and heavy down payment buyers because nobody else could compete. As the market has gotten into this hot, cold, hot, cold, hot, cold, kind of like you're trying to manage a hotel shower where you're either scalding or freezing. That's the market right now. We finally have a chance for FHA buyers to get through. You have agents that don't know what to do with those required repairs. You have agents that don't understand that process or how the appraisal sticks to a listing. Come educate them. The VA agents that are out there, they heard from the old guard how difficult VA loans are. Well, VA might be the easiest loan product to get through right now because it's the one thing the Veteran Administration gets right for our veterans is the VA loan process. These young people, and that's how I know I'm getting old. I talk about these young people. They don't know what it's like. You can get your certificate of eligibility on the interwebs. Around here, we used to have to drive to Salisbury to the Veterans Hospital to pick it up in person, and it would take you 6 weeks to get it. And unfortunately, a lot of your older realtors, and y'all know who you are, you're still training out there. You said, VA's awful. It takes forever. It doesn't. It's wonderful. So I need a lender to come in and say, let me bring you up to speed on this. Let me tell you that the VA loan can be assumed by a non-veteran, and here's what the existing veteran needs to know about. Give them some really good data points. Talk about USDA again. Those dollars haven't been getting used, and many realtors are in areas where the edge of their market area is USDA qualified, because you and I, Clayton, we know those maps don't get updated on the regular. And so there are parts of suburbs that are smack dab in USDA, which is going to help somebody in an affordability crisis that we're in. Whenever things are too expensive, look for ways to get some down payment help so that you can reduce the cash out of pocket and help them figure out how to make it work. So there's all these opportunities out there. The smart lenders will bring it to us. And it doesn't matter if you've been originating for 35 years or 5 minutes. If you bring information that my agents can get on the phone with to call a buyer and say, "Hey, I just learned something. Did you know?" That could start a conversation. That's how you get in our offices. And it's just that simple. Now, I'll just say a pro tip is if you want to bring food, ask if the office is, doing a weight loss challenge together, if there's gluten and dairy and lactose intolerant people, because that shows that you're thoughtful about the people in the room, which indicates you'd be thoughtful about my buyer clients as well. You also got to remember each realtor is going to have 3 or 4 favorites on their list, and one of them is going to be the favorite. It's kind of like how you love all your kids, but you love one of them a little bit more than the other ones, and you can't ever say out loud which one it is because that'd be violating.
I like how you keep your kids guessing here, Leigh. If they don't listen to crazy shit on real estate, maybe they listen to Housing News and get a little bit on edge about who the favorite is.
I won't be surprised if I find out that one of my children listens to this and I know exactly which one it is, and turn this off, boy, and get back to your homework. But he's the favorite. So when you look at that, I mean, sometimes depends on which day it is. I mean, honest, that's how it is with your kids. Well, and with your lenders too, because of my 3 favorite lenders, is there room for a 4th? Bring me something that makes you special. And
so you talk about like bringing information to win the attention and win the business. One of the challenges that we've seen pretty loudly in the industry the last couple of years, and even in the last few months on Instagram and TikTok, is the agent desire and the LO desire to be a source of information. And there's been some crappy information out there from early career agents, early career originators. There's some crap spreading around about FHA modifications. The 3-2-1 buy down programs couldn't have been more misunderstood. It's just like info after info after info spreading through viral TikTok and Instagram reels that seem to maybe be pulling the credibility of some agents in the wrong direction. Are you even paying attention to that?
Well, they get sent to me all the time because since I'm fairly visible in the business, I have people say, "Did you see this?
People
Did you
want you
see
to myth
this?"
bust. They want you to go on and get the truth out there.
Glasses on. I'm like, what in the fresh hell is this? That's my favorite phrase, is what in the fresh hell is this? And so I'd say if I were a loan officer, I would want to come to an office and myth bust. It's the phrase you just used. Say, look, if y'all saw these TikToks, let me explain to you why rates aren't going down to 3% again. And it's what drives me crazy is the number of millennial agents. And I'm just going to call them the millennials because it is the young people who keep telling people in their reels and TikToks, go ahead and buy. When rates go back down to 3, you can refinance. Like, you are not looking at the failed monetary policy we're using right now, that MMT is a failure, but they don't know it yet because we're being run by a West Wing cast. You need to understand Keynesian theory. And now I'm getting way too deep for people. But you need to understand more. And so one of the videos I had that did really well in the last 2 years was explaining the relationship of inflation to interest rates, because agents did not have an understanding for why rates were going up while inflation was skyrocketing. They didn't understand that if interest rates are not above the rate of inflation, you can't slow inflation down. Once I explained that, they're like, oh, okay, I can explain that, which allowed them to tell their buyers, hey, inflation's at 7%. Of course, your rate's going to be at 7%. And they took the fear away because they had some knowledge. That's the only way we're going to go combat these really bad pieces of information out there, is for more good people to put correct information out there. I mean, you can take as an example, as of our recording today, the hot news in housing is the FHFA subsidizing of low credit score
the loan
borrowers.
level price adjustment information.
I had a person arguing with me over Twitter, and I love him. I've loved him for years. And I pity his wife because he don't listen real good. And he was saying, it's not really a subsidy. And I said, actually, if you're lowering the cost for one subset and raising the cost for the other subset, regardless of where the start and finish line were, that's a subsidy. Now, the GSEs are flush with cash. If they wanted to use that money to subsidize the low credit score borrowers, that would not be a subsidy. That would just be a different way to direct the dollars. But as you know, it's all smoke and mirrors because they're wanting to buy votes with this policy. But regardless, there are ways that we as agents can take this information and use it for good. So I told my agents, I said, look, I don't care what you think about the policy. If the cost is now lower for lower credit score borrowers, you need to call the people in that category and say to them, this is an opportunity. By the way, let's sign you up for that Dave Ramsey Financial Peace class, which no matter what you think about Dave Ramsey, the Financial Peace class is probably the best educational resource out there for people to rethink how they handle their money. Because if you're going to take a low credit score borrower and keep them in the house, because that's got to be a focus of real estate. How do we get somebody in the house and keep them there? Then this could be a benefit to many people, but we want to make sure we're thinking about beyond the lowering of the fees. How do we give them more financial stability and education so they can stay put? Everything has a pro and a con to it. I wish more lenders, instead of flashing off with, I don't like this, when they've been pricing it in since March. So let's just talk about that for a second. It just hit the news because the news is going to do what the news does. The lenders have been pricing this change in since March. And so if that's the case, we got to talk to our buyers about the opportunity, give them more tools for success, and help people make this a part of their structure. We act so flabbergasted when policies change. Well, no, don't get mad about it. Lean into it. Figure it out.